Good morning, everybody. Mike Vacchi, Princetontrader.com here for ntmarkets.com with your Monday morning pre-market webcast. Okay, let's look quickly at the daily chart here of the ES. Friday was a situation where 1660 held up the last couple of days, and we tried to get over the top of my upper volatility level midday. It was 1657 half. We printed 1658. The 60 held again. We didn't sell off violently, but it was a failure. When we broke the 45 half, the 45 half was a price that we had identified in the room all week long. Tony Rago, my partner, had called that a bull bear line, and it really was. I mean, it was a magnet in both directions. When the 45 broke, then was retested and turned itself into resistance, the market got very heavy. And then the bid just took a walk there at about 3:30, and we got a really hard move down. Now, if you zoom out though and you look at what's occurred, what we've done is we have done a 38.2% retracement of the 1530 75 low up to the 1685 75 high. So, a 38% retracement, not, this is not a huge deal. While Friday afternoon may have felt that the market was falling out of bed, it's a 38% retracement. If you're gonna look back at it, if you have a longer view, that's what's occurred. So to me, the bears have not proved anything yet. So if you're asking me, Mike, we pulled back from 1685.75 to 1626.54. I mean, that's kind of a big deal. I would argue to you that that's really not that big of a deal at all after where we have come from. We've come from 1340 quarter in November to 1675.85, and we've given back 23% of the latest move. Not 23% of the 38% rather of the latest move. Not 38% of the overall move. That would be 1553.77, or half of the overall move, which is 1513. So let's not get ahead of ourselves here with respect to what the bears have accomplished, because they haven't accomplished anything. We have broken the middle band, and we've done that before. Did that with this arrow here, and a couple arrows going back that are going to be way too small for you to see. But the arrows don't matter. What matters is the concept of, since the 1340 area all the way up to 1685.75, whenever the middle band gets broken, the bears have never been able to convert the middle band to resistance. They have to convert the middle band to resistance if they're going to make any real progress down to those lower levels. And they are, I don't want to say they're not getting it done overnight, but they're in trouble if they give the middle band back, because what's happened overnight is, here's our low print from Friday, 1626 quarter. Here's that fib line, the 38% retracement line that I talked about. It was tested here and held, then retested after Europe Open and held again, and we've now bounced 9 handles off of that. So you've got the daily pivot and the 3-day pivot in a zone up here, 1637, 1638. That is critical, that pivot zone hold. If that pivot zone does not hold, then you're going to get into a situation where the middle band is going to come back into play up at 1645.32. So essentially up here with a 9-day pivot. You want the double pivot zone to hold if you're a bear. It has to hold up here in the 9-dayer if you're a bear. If the bears give it up again, and we've seen this before. We saw this after Cyprus. There was a 26 handle gap down Sunday night, and the bears gave it all back. So don't sit there and say to yourself, well, it's too much to give back. No, it's really not. So the bears are not in a position. I always say the bears can't take any days off. They can't take Monday off. They had a great day Friday. They cannot take Monday off. They need to push. They need to confirm middle band resistance, and they need to push lower. Okay, so everybody have a fantastic day. Mike Vacchi, Princetontrader.com. Check out the website. Check out the chat room. It's a really good vibe in there. We would love to have you check it out. I will catch everybody tomorrow morning with another webcast. Trade them well.